Welcome to Slackin' Off with Brady Slack.
Welcome to another awesome episode of Slackin' Off. I'm your host, Brady Slack. And today we have someone who's become a very close friend. We talk, at least 3 or 4 times a week now on different client files and different things that we have going on. Without further ado, I'd like to introduce Nico Suazo to the show. Thanks for hopping on with me today, Nico.
Yeah, thanks for having me, Brady. I appreciate it.
Absolutely. This is going to be a fun conversation for our listeners, especially those who enjoy real estate. And we've had a couple really good guests on that do real estate so far. But from the perspective of more maybe tax focused than anything, we're going to talk a little bit about cost segregation analysis today, the importance of that. But the reason why I'm excited to have Nico on the show, for those listening, is because Nico's going to talk about cost segs, but he's coming into the conversation from an investor standpoint. Sometimes on when we have these conversations, Nico will talk with people more from a technical. They're the ones that are operating the background. And although you're operating in the background, Nico is our account manager with the Cost Seg Authority. They do great cost segregation analysis. There's a reason that we use them and our investors use them to do their cost seg studies. But Nico is a real estate investor, and he has the unique perspective of why cost seg studies are important. But before we kind of dive into that, Nico and I were talking, and I told him I would love for listeners to hear your story, because you owned and operated a company. You started to invest into real estate, and now you're more on the operations side of the cost segs. Tell me. Let's dive into your story. What got you into real estate?
Yeah, absolutely. No, that's a great question. So I'm going to go a little bit further back than even that to start. So right out of college, I thought I was, I had these grandiose dreams of becoming this major professional and owning multiple companies, so on and so forth. And I eventually had a buddy that had talked to me about getting into real estate, commercial real estate particularly.
Okay.
And so I joined up with a local company here in Utah to do office and industrial sales and leasing as a commercial real estate agent.
Okay.
And, I did that for a little over a decade, had some great experiences, had made some amazing relationships, a little bit of success. And, the whole time during this, and the reason why I mention it is, I was helping other investors and brokers and business owners buy and sell these properties or lease them out to then in turn create more money, right? And I always thought in the back of my mind, I wanted to be that same person. I wanted to invest for myself. And so fast forward a couple years later, after being in commercial real estate, I joined up with a company called Vivint Solar. They were creating a commercially focused team to go out across the U.S. and sell commercial solar to Fortune 500, Fortune 2000 companies via installations on their facilities, manufacturing, corporate, whatever that may be. And about a year into it, they decided, it wasn't quite the vertical for them. And so at that point in time, I had already established some amazing relationships. I already had 1 or 2 projects on the hook. And I said, based on my history and loving solar, getting into the solar game, it was all a numbers game. And so for me, it was like, hey, I'm going to jump into this. I'm going to create my own consulting company. So lo and behold, I created a company called Platinum Commercial Solar, essentially a consulting company for other companies, business owners, to essentially put solar on their commercial properties. And, it was a little slow rolling, but got some great success, some great relationships that I still have to this day. And eventually around 2021, 2022, COVID hit, things were going pretty well financially, and I started to pay a tremendous amount of taxes. And then after writing, I remember it was one day I'd gotten my tax bill, and I said, I'm sick and tired of this. I don't want to do this anymore. I'm tired of paying taxes. I said, I'm going to put my money where my mouth is finally. I'm going to invest in real estate. And so that whole long backstory to say this, I took my experience with brokers, investors, helping other people make money, and jumped into purchasing some apartments via a general partnership, created a company called ZNE Capital, stood for Zero Net Energy Capital. Essentially, the premise was installing solar on commercial apartments to create essentially or increase a better NOI, net operating income. And so did that. Our first asset was a 64 unit apartment complex, Tulsa, Oklahoma in 2021. Then early 2022, we did a 235 unit apartment complex in Fort Worth, Texas, and put solar on both the assets, increased the NOI. And the reason why that's important is going back to the basis of this meeting or this podcast is taking the depreciable benefits, tax benefits for myself as an investor, essentially to not have to pay taxes, leverage it for a cash flow position from a personal perspective, from a financial perspective. And it's been amazing. I eventually sunsetted the commercial solar company at the end of 2022, so the end of last year, and landed here at Cost Segregation Authority as an account executive, working with investors and CPAs like yourself to do account management for cost segregation studies and energy credit studies. It has been an amazing journey. I call myself a walking billboard here because, as you stated earlier, Brady, not only was I an investor, but I was also a customer before I came here. And I could truly say I've seen and I've reaped the benefits personally from doing cost seg studies and seeing the benefits of how that affects your cash flow. And it's an amazing tool and tactic for us that get to know it and learn it and utilize it over time. So
I knew about the solar. I honestly didn't know about the real estate transaction side of things before you were in solar. So that was a good little tidbit for me. I learned something new about you, Nico.
yeah.
So let's for those who are listening who might not know what a cost segregation study does, could you maybe give us the Cliff Notes version or a simplified version? Because the cost segregation analysis can be very complex, but could you give us just a brief overview? And I can chime in, or if you want me to help, that's totally fine, of what a cost segregation study is. What is a cost segregation study?
Absolutely. So, from a high level, when you purchase an income generating property, the IRS has indicated that you have the ability to essentially accelerate the wear down, for lack of a better term, of that property because you have tenants or people paying for the use of that property. In other words, the true definition is depreciation. It's
Yep.
the same as though if you purchase a vehicle or lease a vehicle for the purpose of business. This is simply a real estate property. So you're able to take that real estate property and you have a standard depreciation that you can take for that property on your taxes. And you alternatively, what you have strategically essentially is a cost segregation study. A cost segregation study takes the depreciable basis of that property, or essentially what you paid for it, minus the land, and takes the remaining value and allows you to do a study on that property and break down all of the assets, both internally and externally, into lifespans, if you will. And a portion of those lifespans can be accelerated to a 1 year cycle or essentially sped up so that when you file your next taxes, essentially, you're able to take the tax benefit of that accelerated depreciation. And, as of recently, the last few years, and even up until this date, 2023, as we're airing this podcast, there is what is called bonus depreciation. And essentially, up through 2022, you could accelerate or take 100% of that bonus depreciation on that tax filing as well. essentially what that does is that yields a tax benefit for you, whether that's a savings on your taxes, or if you've already paid the taxes, you get a refund. Whatever your particular tax situation is or basis situation is, it all depends, as you know.
Yeah.
And so the beauty of this is, I'll give you a hypothetical example. Let's say you buy $1 million investment property. The land is worth $300,000. You have a $700,000 basis or number that's left. We at Cost Seg Authority will take that $700,000, break it down into these lifespans, and produce a report that allows you to accelerate and take the tax benefit at the end of the day on your filed taxes. For many of us as investors or business owners, it is a phenomenal cash flow tool, as I said earlier. And the ultimate goal is tax savings, cash flow, business strategy, or if you're really smart, taking that and reinvesting it and making more money off of essentially what you've saved or taken as a benefit.
Yeah, that was good. I'll add in some technicalities
Yeah.
as well. There's the most common form of depreciation that people hear about, for those that are listening, is the decline in value. Depreciation versus appreciation. But there is an accounting term, depreciation, which really just means cost recovery. And I like what you mentioned about the wear of the property. Over time, you're going to have to replace that. And so the government allows you to deduct the cost of an asset over a period of life, which they determine at the end of that life cycle you're going to have to replace anyways. So we're like, for all intents and purposes, for those that are listening, we're going to talk about depreciation from an accounting perspective, not a value perspective today. The other thing I want to highlight as well, to help listeners understand, is when we talk about these lifetimes as defined, you kind of like what Nico was saying, these lifetimes are determined by the IRS. This is not something that you can just say, my vehicle is going to last me X amount of time. No, the IRS says, hey, typically a vehicle might last you 5 years. Footings might last you 27 and a half or 39 years. Electrical might last you 7 years or 15 years, right? So a cost segregation analysis breaks down these assets, like Nico said, into their appropriate life, allocated life, and differentiates whether it's personal property or it is not personal property, right? And from a technical standpoint, accounting wise, that's what the IRS looks for in a cost seg study. Now, let me ask you this, Nico, and I'll dive into an example that you and I both had to deal with not too long ago. Who should perform a cost segregation study on a property?
Yeah, I love that question. And I actually get this question, I'd say almost daily, whether we're dealing with experienced investors or new investors. A cost seg study is not a simple report or paper that can just
No.
essentially be put together. There is a tremendous amount of essentially, compliance. There is IRS guidelines. They in fact have a whole written book that's approximately 400 pages. Very thick, long book that is called the IRS guidance book on cost segregation. Right, we have to comply with that guidebook to create what is called a quality report, and the elements of that quality report will answer your question in that you have to have, you know, everything has to be documented, everything has to be allocated appropriately. There are certain inherent values that have to be as substantiated to all of the assets within that investment property, and ultimately putting it all together in a report that can be backed and supported and comprehensively put into, at the end of the day, filing your taxes, right? Because what we're saying is we're taking this property, we're breaking it all down, we're accelerating everything. That inherent value will essentially yield a benefit for you as the investor or owner, and we have to be able to substantiate that not only from our perspective, but also for the customer's perspective. Every report that we do goes through an extensive either site visit or video call, depending on the type of property, to find all of those elements. And then the real work begins in that we take inventory, we account for everything that you kind of mentioned earlier, right? So everything down to carpet, countertops, blinds, light fixtures, you name it, everything. We take inventory of every little thing, we compile it all, and that's what creates that quality report. Um, oftentimes, as a matter of comparison, there are some companies out there that and even sometimes in many cases, some CPAs that will try to do cost segregation studies. Unfortunately, what happens is at the end of the day is if they don't understand the requirements of a quality study and or how to substantiate that, and not only that, but at the end of the day, back it up with the IRS to say, hey, if there is an audit or if there is a requirement to essentially meet with the IRS and substantiate what we have put together, not a lot of people can do that. And that's where they truly fail. And so that's where we really exceed, right? We do an engineered study, so we account for everything. Our studies are fully backed up. We'll back you all the way up, all the way until if there ever was an audit, we will support that 100%. And then lastly is of course working with CPAs like yourself and tax advisors. They love our reports. They're very comprehensive. They're very detailed. Again, we'll back them up, and the value is tremendous for the CPAs, the clients, the investors. At the end of the day, it's we try to make it as plug and play and as comprehensive as possible, and ultimately, typically yielding the goal of either saving or creating some type of tax benefit for the investor. So, uh, overall, I would say we are arguably one of the best cost segregation companies in the United States, and I don't just say that. Like I said earlier, I'm a customer as well. I have a lot of customers that have used other companies in the past and have said the same thing, right? They've seen the difference between the reports. They've seen the comprehensive details, and their CPAs have backed us up as well. So it's been great.
So little funny story for those listening. I referred a client of mine to Nico probably about 4 months ago at this point. It's probably been about 4 months. You'll know who I'm talking about here in a minute. And I referred this client to Nico about 4 months ago. Nico went through a benefit analysis, which I love what CostSeg does is they'll go and they'll get the property details and they'll provide an estimation on the tax savings that they think this client can get. They provided this benefit analysis to the client, and then they told this client the price. I use Cost Seg Authority because they deliver fantastic reports. They take care of some tax forms that otherwise I would have to charge the clients to do. And they're if I ever have to represent a client in an audit or an examination, I have to provide what's called burden of proof. To substantiate the claims that we are making on this tax return. And that burden of proof is very easily outlined and depicted in the studies that the Cost Seg Authority provides. So anyways, we provide this client with this benefit analysis. We let him know what the price is. And the client, who is a salesperson himself, goes and tries to get 2 or 3 other quotes. And one of the quotes came just about half of the cost of what the Cost Segregation Authority's study is. And I have some other clients who sometimes they're newer investors. They'll do like a DIY cost seg study that you can find some online. I don't use them, not saying they're bad. I've seen 1 or 2 that are decent, but they went to this accountant who supposedly was doing cost segregation studies and charged him quite a bit less than what you guys were going to charge him. And he got this study prepared and done, and he presented us with this study. Now, when I get a cost segregation study from the Cost Seg Authority, and there are even a couple other companies that I've gotten studies from that are good, these reports are 30, 40 pages long. I mean, that's how much goes into these cost seg study reports. And the study that I got from this client that this other CPA had provided, I think I sent it to you, Nico. Was it like 6 pages? Maybe 5 pages.
Yeah, it was about 4 or 5 pages, correct. Yeah, and the first page was a whole lot of white space. Yes.
And the study, like when I get a good study, I can see every asset that is being accounted for with its cost, with its previously accumulated depreciation, with its percentage as it's allocated to the total cost of the property, its method of depreciation. It's broken down really good. And this study gave me 3, maybe 4 lines of what the depreciation was. And it just gave me the total for the 27.5-year life property. It gave me the total for 15-year life, the total for 7-year life, and the total for 5-year life. And it had
Yes.
no depictions of what those assets were. And what I did with my advisor who was working on this client's tax return, I told him, send it back. I am not going to put that information on a tax return to claim the tax benefits and not have burden of proof or substantiation. And we sent it back to this client. The client got really upset because he said, well, this accountant told me that this would work. And I said, this accountant can file your taxes because I'm not going to put my name on that tax return.
Yeah.
And he got really upset. Then he finally went to Nico and he finally got the study done, and he was kind of a pain in the butt from there on. But there is a vast difference in the quality of a study you can get. I don't know if you have any, now you know exactly who I'm talking about, but any follow-up comment to that?
Yeah, I mean, and he's actually a really nice guy. And in talking with him, he was eventually, came around to be amazing to work with. It, essentially to recap the situation, you're right. He chose a lesser priced study, if you will.
Yeah.
And at the end of the day, the results, after looking at the first report, it was just not there. It wasn't comprehensive. It wasn't going to stand with the IRS.
Wow.
And quite frankly, I was happy and pleased to hear that, you and your firm basically said, hey, we can't stand by this. This just
No.
isn't going to work. And so when he came to us, he's like, hey, I need to get another study done. I need to get this redone. And ultimately, in full transparency, it was almost double the cost. But the thing was one, we're going to back it up with the IRS. Two, that it's done right. Three, we actually were able to find him more depreciable value, essentially more tax benefit than that original study, which more than covered the additional cost of our study
Yeah.
alone. So at the end of the day, to summarize, it was like you get what you pay for, and this is the true sense of the word. And here's the thing. I know he's going to come back next year. I know that he trusts you and your firm, and we've got his back moving forward, and he loves the results.
Yeah.
Yeah. So it's we took a decision that was made earlier on. We can call it a mishap, whatever, and turned it into something positive. It's been great. So.
Yeah. Now, mind you, for those that are listening, if you are investing into real estate, some of the costs of getting a cost segregation done can be a little daunting. I have one client who, starting out, one study could cost you $4,000, $5,000, right? I have one client who has quite a few different properties, and I think they spent this past year getting some cost segregation studies done. I think they spent about $45,000 getting all of these studies done. Now, mind you, they own some warehousing and some multifamily and this, that, or the other. But I just sat down to do the taxes with this client, and we estimate that the total tax savings from these cost segregation studies saved him over $350,000. Again, I do math for a living, but you don't have to do math for a living to know that I would rather spend $40,000 to $45,000 to save $300,000 to $350,000. You're still net positive $300,000, right? But
Absolutely.
one question that I would have for you, because I know you go to conferences, you deal with investors, you talk with investors, they're in your circle, you come from this broker space. How many people don't get cost segregation studies done?
Yeah, that's I wish I had a solid answer for that, but that's a great question. And here's the funny thing. And I say this in my executive meetings, my board meetings with other clients and brokers, right? Cuz they'll ask the same thing. They're like, "Where are we in the world of cost seg? Where are we with CPAs?" And I believe, in my opinion, is that we are at the tip of the iceberg. It is relatively new to investors. It is relatively new to a lot of CPAs, to be honest.
Yeah.
And with recent legislation, and recent being the last 5 to 7 years, a lot of this has come to light with the additional tax benefits. And so I would say if you don't know about it, do a little bit of research on it. Obviously, if you're listening to Brady's podcast here, reach out to Brady or his team. They're going to have some great advice. I always say, it's not going to do any harm by us consulting with you and doing a free benefit analysis. That's one thing that I can always offer up front. And here's the nice thing about my job or the rest of my team's job is, at the end of the day, if the report's good and you can move forward with it, that's phenomenal. Great. We're generating revenue for our company, right? But what's nice and what I'm getting to is the numbers speak for themselves. I believe you were just essentially saying that, right? It's like, it's no
Yeah.
water off my back. If the numbers don't make sense, they don't make sense. I'm not going to pressure you into doing something that you really don't need to do, or don't feel like the return is there. The other thing too is, at the end of the day, is I'm into building relationships, just like you and I have, Brady. We've already got one or two that are coming back as repeat clients.
Yeah.
I have all different size of clients, and the nice thing is at the end of the day, and I tell everybody this: call me, text me, whatever you need. I'm always available. Obviously, if I don't answer, I'll get back to you. But I love helping people. Again, being an investor first, before I came here, having the personal experience, having the community and relationships that I have, and I believe to be a positive and valuable relationship that I can provide to people in my inner circle. I just love helping, and having partners like you has been a great conduit to do that. And yeah, at the end of the day, I would say, if you haven't heard about it, if you have some questions, feel free to reach out to Brady and his team. Obviously, myself and my team, if you need to, more than happy to consult. And we're here for years to come. We've got some big aspirations. We're going to be doing some really cool things across the U.S. with some larger companies as well, and super exciting stuff to come.
That's cool. I'm going to preface my next question with kind of a little commentary, if you will. I help represent a couple real estate investing coaching platforms. I help advise a couple different investment groups, syndications, and it happens fairly often when I'll hop on a consultation call with a new client, and they come from the realm of real estate and from an investor standpoint, and they tell me a conversation that they've had with another accountant or their previous accountant about cost segregation studies, and how their accountant said that it was not a good idea or they shouldn't do it. And mind you, there are specific situations where maybe a cost segregation study doesn't make a lot of sense. Okay, so that does need to be said and put into people's frame of mind, which they should get a consultation about. But what have some experiences been working with advisors, and maybe highlight the difference between, if you are in real estate, having a good advisor versus not having a good advisor? Have you seen the differences there, and can you highlight that?
Yeah, absolutely. I would say daily. In fact, multiple times a day. I have, as an account manager, I'm the one working with, or I'm the face of the company, working with investors on a daily basis, right? So you've got, your, I would say, for lack of a better term, newbie or mom and pop investor that's, their first property, one or two, all the way upwards of, portfolio, family trusts, national retailers that are looking to do, hundreds, if not thousands of locations. And to answer the question, if you've got a newer investor that hasn't been through this process before, or might not fully understand the requirements to be met to take advantage of a cost seg study, it is highly advantageous and valuable for them to work with guys like yourself and your team, right? And that's not to say that it always has to be a CPA. It could be a tax advisor. It could be a wealth advisor, right? I have a lot of wealth advisors as well, right? They don't necessarily do the taxes for their clients, but
Yeah.
they know that they need to offset some of their tax bases. So they'll reach out to a guy like myself and say, "Hey, Nico, this guy owns 20 restaurants. He's got, 30 commercial properties. His tax liability was $1 million this year. What can we do to help him?" That's the
Yeah.
kind of stuff where I can really dive in and work with them. But on the other end of the spectrum, with experienced investors or owners, business owners as well, is they have somebody like yourself or your team on their team, or hired as consultants, and work directly with them to make sure that they are in fact making the right decisions, that they're truly evaluating the overall perspective of, what to do, when to do it, and how to do it. And a lot of that again comes back to the numbers. And so um, if I have somebody that reaches out to us, and if I feel as though I've gone through the explanation of what a cost seg study is, and I feel like the benefits there, and I've asked them some qualifying questions, and they're just kind of on the fence, I always refer them out to, you know, um, clients like yourself, CPAs, tax advisors, to say, "Hey, listen, I've got, you know, investor John Doe that is on the fence. He doesn't quite understand it. I feel like I've articulated the value and the options, but I'm not going to sway him either way. Perhaps you could talk with him, and perhaps he could even use a CPA or a tax advisor, right? And it may be a situation where they've done their own taxes in the past, or they've had, unfortunately, in some cases, even a bad CPA experience, right? Not everybody's perfect. And so, yeah, at the end of the day, it's making sure that they're taken care of, no matter what their needs are, whether I get the business or not. That's the beauty of what I do, and also having partnerships like yourself is being able to provide that, be able to provide the value, and be able to sleep at night as well. Right? It's the last thing I would want to do is try to provide value, give them some guidance, not tax advice, but some guidance on, maybe what to do, what decisions to make, who to partner up with. And I want to be able to sleep at night as well. And I don't want to give them
Yeah.
bad guidance. So
No, that's good. I want to pivot away from real estate a little bit because this is something that a lot of I don't know of any other cost seg company doing it. You guys work a lot with energy credits as well. Um,
yes.
can we dive into that a little bit? And just like our listeners. I've worked with them on a couple of clients, but I'm going to be honest with you. It's not something that I do a lot with my clients. At least from the investment standpoint. So I would love to dive into what the Cost Seg Authority is doing with the energy credits and how some investors might be able to take advantage of those opportunities as well if they already own real estate.
Yes, absolutely. First of all, thanks for bringing it up, Brady. This also, I believe we are at the tip of the iceberg
Yes,
regarding knowledge and market and advantages to be taken. Um, so energy credits are essentially, there's two different versions. There's a commercial version and then there's a residential version. So
yep,
depending upon the type of asset that you own or that you build, essentially, will determine the type of credits that you can take. So I'm gonna approach this from a high level, hopefully comprehensive viewpoint.
you're good.
Essentially, at the end of the day, what I always tell new customers that are new to energy credits or deductions is it's money left on the table. To paraphrase, right? You have a builder. I'm going to give some examples. Two examples. One, let's take a single family home builder that builds 10 homes, even one home for that matter. They build to a minimum energy efficiency standard that are provided with those specs on their architectural plans. They can provide those to us, and as long as they meet a minimum energy efficiency standard or threshold, we can provide them the energy credit for those homes. And anything that was built up until approximately 2022 was $2,000 per door on a residential home. And that could be duplexes, fourplexes, at $2,000 a door. So let's say you got a guy that builds 10, that's $20,000 that they can get as a tax credit, essentially, that says, hey, you get this back. It's money that they didn't realize was there. It's like a
Yeah.
reward that's been presented for them as the builder for holding the basis when they sold the asset, or they could still be holding on to it.
And these are just energy efficiency upgrades. We're not even necessarily talking about solar panels at this point, are we?
Correct. We are not
Yeah.
talking about solar panels. We are simply literally, if you build a home and the architectural plan set that you've chosen meets a minimum energy efficiency threshold, which by the way, most of them do,
Are very
you're
low.
eligible for those credits. It is literally a certification. We run a study. We certify the cert itself, and then we turn that over to you, and you file that with your filed taxes, and that's where you get the credits.
And
That's on
these
the
are things, sorry to cut you off. These are things
yeah.
like insulation, windows, lighting, doors, appliances. These are these kinds of things for those
That
that are
absolutely,
listening.
you're absolutely correct. Yep. The basic things that go into building a shell of a structure, and as long again, if they meet those energy efficiency requirements, which
Yeah.
again, I haven't seen any in all the studies that I've done, I haven't seen one not qualify. So,
Yeah. Correct.
yeah, today's building code is pretty energy efficiency. So, as a matter of perspective, if you go over to the commercial side, you start to get into multiple units. You start call it apartments or condos or townhomes, and then you get into commercial warehouses, shopping centers, office buildings, whatever that may be. You start to get into a price or a credit per square foot on those buildings. As an example, let's say a developer or builder or investor built a 100,000 square foot warehouse, right? And that warehouse had some office space in it. They had some energy efficiency items. It was well built. They're eligible up to $1.88 per square foot. So in this case, we take a 100,000 square foot warehouse, we multiply that by 1.88 or $1.88 per square foot. They can get a $188,000 deduction
Wow.
that they may not have been aware of before. In other words, I have a tremendous amount of developers, builders, investors that are coming to me on a daily basis saying, I built this, a year or two ago. I didn't realize I could have it. What do I need to do to get it? They simply send me a set of plans. We verify the details. We tell them it's going to cost you X, which is very minimal to get these energy credits. We provide it for them. They then come to, a company like yours. They help, file the taxes. They get it. They love it. It's just phenomenal. There's a tremendous opportunity out there for builders, developers, anybody that builds anything, to gain these credits or tax benefits.
That's that's pretty good. What about, are you guys doing anything on the commercial or the residential solar side of things? Like those are the energy efficiency upgrades, but what about actually installation of a solar system? Anything on that end?
Yeah, so at this point in time, we are not doing anything with the
Okay.
solar. Um, if anybody that's listening to the podcast is familiar with it, that is kind of a separate
Yeah.
transaction, something that can be capitalized on your filing, separate of what we do for the studies. So at
Okay.
this point in time, we don't venture into that.
Yeah, I was curious. That's pretty cool. How with the energy, how does that coexist with the cost segregation analysis? Because there's overlap, and I'd like you to highlight that so that people can understand that a little bit better.
Yeah, absolutely. So, I'll give you an example. I have a builder right now that built 26 townhomes in, I believe it's Burley, Idaho. And essentially, what it is it's multiple fourplexes all on one parcel of land. And not only is he holding on to those as rental property, so we're going to be able to do the cost segregation study because he plans on holding on to those as long term assets. He's renting
Yep.
them all out. He not only gets the depreciation and tax benefit from that, but then in addition to that, because they all were placed into service and he owned those assets at the time that they were placed in service, for the energy credit, we're also getting him $2,000 per door. This is a tremendous amount of cash flow and money that essentially, if he didn't connect up with us, he wouldn't have been aware of it. It would, think about, hypothetically speaking, right? He has a tax basis that he has to pay per year, and he never did the cost seg study, and he never did the energy credits. That's a good. I'd call it maybe a couple $100,000, $250,000 that he's leaving on the table
Hmm.
that he can't account for that maybe he wasn't aware of.
And the coupling between the tax credits and the depreciation should entirely, I mean, obviously depending what his tax liability is and what other sources of income he has and how he's able to capture that based on passive activity loss rules. I mean, even if he is subject to passive activity loss rules, the tax credits that are passed through should be able to benefit him tremendously. Again, I
Absolutely.
don't know what the cost is on that project. I can imagine what it is based on similar circumstances that we have with our clients, but that study should pay for itself.
Absolutely. Yeah, tenfold, tenfold,
That's
twentyfold, many, many times over. Absolutely.
that's pretty neat. How does doing from your in your situation, because you do come from the investor standpoint, how does getting the cost segregation study done or this energy study done, how does this benefit you and allow you to go purchase more real estate?
Yeah, that's a great question. So I'll just give you a high level example of my particular situation. So as I stated before, I had this commercial solar consulting company. I was making amazing money,
Yeah.
more money than I'd ever made before. And then I got my tax bills, 2, 3 years in a row, and I was just super tired of it. And so at the time, the
Do you
current
mind me? Do you
legislation.
mind me asking what that was? You don't need to give an exact dollar amount, but a roundabout ballpark number what that was, because I want listeners to understand that there's a direct correlation to the dollar value here.
Yeah,
If you're okay with it.
absolutely. I mean, we're talking anywhere between 25 onwards and upwards of 60, maybe $70,000 in tax basis per year. It depended on the year, right?
Yeah.
Earlier on, it was lower. As I made more money, it got higher, right? And
Yeah.
so to put that all into perspective, I had to pay all these taxes, and that was coming out of that direct cash flow that I was making from my company. And so I said, I was like, there's got to be a better way. Okay, I'm going to put my money where my mouth is. I went and bought these apartments, the first set. We did a cost segregation study with Cost Seg Authority, got these tax yields, and because of the CARES Act at the current time with the coronavirus, so on and so forth, I was able to go back 5 years based
Yep.
on the previous taxes that I'd paid. In other words, I was able to recoup all the taxes that I had paid over the last 4 or 5 years since being a real estate professional. And
And
so,
those just for those that are listening, that comes from using the net operating loss rules that were implemented with the Tax Cuts and Jobs Act. That was implemented.
correct.
So that yeah, that's exactly right. That's cool.
Yeah, so at the time, I always tell this story is my wife thought I robbed a bank or robbed the IRS, which truly in
You did.
effect it wasn't. It was
Yeah.
just we're simply abiding by what I'm allowed to do as a real estate professional and depreciating a property and taking advantage of it. And it was phenomenal. And so fast forward to today, I just filed my recent taxes as well. I really don't have to pay any taxes. In fact, I got a
Mhm.
refund.
Yeah.
It's a beautiful thing, and so the benefit of that is being able to, for me at least personally, having a breath of fresh air. I don't have to pay taxes, right? It's I can keep
Yeah.
investing. I can take that money that I would have otherwise spent on taxes and reinvest it into properties, business ideas, you know, saving it some of it maybe for a rainy day as well, right?
Yeah.
It's just that breath of fresh air and knowing that I made the right decision. I've partnered up with the right people. Finally, I've put my money where my mouth is, and to be honest with you, it builds a little bit of confidence as well to be able to evaluate and take or how do I say this, make stronger business decisions, mitigate the risks up front because of all the things that you learn from it. It's been amazing. It's changed my mindset completely.
I mentioned that client a little earlier, not the one that had the problems, but the one that was able to utilize the cost seg studies. Like I mentioned before, we estimate that his total tax savings after he used his cost segregation studies is right around $330,000. For someone like that, to kind of highlight it, is able to take the money that they otherwise had saved to pay the IRS and use it to put down on another property. Even 2/3 of that is 20% of $10 million to be able to go acquire $10 million worth of new assets, which again are just going to provide this individual with even more depreciation on the new
Yeah.
asset. This is a sick game that people, I don't know that they realize is available to them, and just continue to do that. Plus, now he's generating a new asset with new cash flows and that are also not taxed. I mean, and people, when I talk about this with people, they always go, "That you can't do that. There's no way you can do that." And it's like, you can.
Yeah, you really can. You bring up a good point, Brady, and that's part of my mindset that's changed is, I look at the people that are doing masterminds that are having such what I would call relatively fast success in real estate investing, and this is part of that strategy, and this is the
Yeah.
part that they don't mention. And that's why when you mentioned, hey, Nico, let's talk about this. I absolutely love it, right? I can't show my excitement here on this podcast as much as I have when Brady and I are talking or when I'm talking with some potential clients, but I absolutely love it, man. It can change a person's life.
Yeah.
It can really open their mindset. And back to the point that you said, if they reinvest it wisely and if they think about it in the overall broader picture, you really can make money on top of that money essentially, right? You're just being very smart with it. And that's how a lot of these bigger names have had their great success, right? They
Yeah.
don't always mention that.
Yeah.
I always liken it to, not to get political, but you liken it to the sense of people say Donald Trump didn't pay his taxes. It's like, well, that's not exactly true. What happened was he owns all these properties. He develops all these properties. He he plays the depreciation game and takes the tax benefits. He's a very wise and smart real estate developer
Yeah.
and you know, developer investor. So
Yeah. I again, not to get political, but you did bring up a good point, and we've mentioned the fact that a lot of these provisions were made available in the Tax Cuts and Jobs Act. A lot of changes were made in the Tax Cuts and Jobs Act, which is a big Trump quote unquote tax
yeah.
overhaul, if you will. What do you foresee, or what does the Cost Segregation Authority foresee happening with future tax legislation as far as it relates to the bonus depreciation and cost segregation analysis as we continue to step down from 80 to 60 and then to 50 indefinitely? What do you envision happening with this? I have my own thoughts that I can provide afterwards if you'd like, but I would love to hear what your thoughts are and if you guys have seen anything come down the pipeline.
Yeah, of course. I definitely welcome those. Yeah, I mean, it's a matter of perspective. So currently where we're at in 2023, we are at a 80% bonus depreciation.
Yes.
Now, that doesn't mean that you necessarily lose the 20% that's remaining. You can essentially take that out over the rest of, the remaining years that are left to depreciate. You're just able to capture 80% of it. Into
Yeah.
2024, you're able to capture 60, 2025, 40%. That doesn't mean necessarily, again, that you're losing all the benefit. It's just they're essentially stepping it down. As
Yeah.
far as current legislation goes, I think that's anybody's guess. I think, has it been phenomenal for the United States? Has it been a great tool and asset, not only for investors and developers, but also for the IRS to reward people who are making a educated, hopefully risk mitigated investment into assets, properties, business, generating capital. Right? It
Yeah.
takes money to make money, and that's essentially what we as developers and investors and business owners are doing. So, um, based on what I've seen, based on other investors that I talk with, I do go to a lot of trade shows. I do talk with a lot of other developers. It's very positive. There's still a tremendous amount of opportunity to be had, to take advantage of, and as of right now, it's not going anywhere anytime soon. So, I would say, if you're on the fence, if you're considering it, dive in, give us a call. Obviously, reach out to Brady; he'll be able to educate you as well. And always happy to help where we can. And at the end of the day, that's up to you. Again, it comes back to the numbers and your current situation and basis. So,
That's good insight. Any other last minute thoughts you'd love to give the listeners before we quit slacking off?
you know, uh, yeah, I mean, I'll just say I appreciate the opportunity to hop on here. For anybody that wants to know more about cost segregation, or for that matter, energy credits, it is a phenomenal tool. And that's not just me working for Cost Seg Authority. That is me as a personal perspective, an investor. Again, I talk with a lot of investors and have some amazing relationships, and I can't tell you how many times I've made the introduction to cost seg and or energy credits, and people have come back after they've done it. And they're just like, "Thank you so much. It's
Yeah.
changed the way I think about how I invest. It changes the way I think about my business and my overall personal financial perspective as well, because oftentimes it does affect your personal, income or consequences, whatever that may be. Yeah, I would say, consider it, highly consider it. If you have an income generating property, reach out to Brady if you can. And yeah, I just appreciate the opportunity to be on here and share my personal experience and obviously share some stories about our successes and, where we've come along and obviously the opportunities moving forward. So yeah,
No,
thank you.
absolutely. Again, thank you. For those who do have questions, please remember that what we've talked about today is just another tool in your tool bag. It's just another opportunity to take advantage of the tax code in another way that you might be able to save some money on some taxes. For those who are active real estate investors, or those who do have properties that you might want some more information on, please like and subscribe, comment, give us some feedback. We love the feedback so that we can make our shows better for you guys. And message me on Instagram. Nico's information will be in the show notes, so you can have those, and you'll be able to contact him if you'd like. Let him know that you heard about this opportunity from Slackin' Off. But again, if you do have questions or you would like some of these introductions, you're more than welcome to message me on Instagram, message us through the show notes as well. Find us on Linktree, and we're more than happy to provide those connections as well. Nico, again, I can't thank you enough. It's been fun to work with you and refer some clients back and forth. I do appreciate that. And I know my clients have reaped the rewards of cost segregation analysis. So again, thank you. For those that have been listening, thank you. This has been another wonderful podcast of Slackin' Off, where we've done a little bit of Slackin' Off today. Thanks for listening, guys. Have a great day.
Thanks for tuning in to Slackin' Off with Brady Slack.